The one and only thing you need to know to fully understand why the Swiss regulator plans to kill staking. And I'm also going to explain it to you where the Swiss regulator gets it completely wrong and why they are making the wrong decision. FINMA, the Swiss regulator, has recently communicated they actually want to require a banking license to offer staking. The Swiss regulator is making that argument because in staking protocols, the crypto assets that you stake are not available at any time. When you stake your cryptos, the cryptos are actually locked up in the validation process, and if something goes wrong in that validation process, then your cryptos are slashed. And because of that, the Swiss regulator is arguing that staking is more similar to taking deposits from the public than to custody of assets. And because of that, the Swiss regulator wants to require a banking license if you're a staking company, which will be completely unfeasible for any crypto company. Now, let me explain to you where the Swiss regulator actually gets it wrong, because they're comparing taking deposits from the public with staking. When a bank takes deposits from the public, a liquidity transformation happens. So the bank takes the cash from the public, and in the back, they buy assets, less liquid assets, through which they earn yield. For instance, so a bank can take cash from the public and then in the back buy government bonds and then earn the interest rate on those bonds. That's what happened here, a liquidity transformation. Cash is extremely liquid, fully liquid, but the bonds are not. That's why you need to have a banking license and you need to have a capital requirements that protect you if something goes wrong. Things definitely can go wrong. We saw that in the US. A lot of the banks actually took cash and deposits from the public. In the back, they bought US government bonds. The interest rate rose, so the price of government bonds went down. The banks have massive losses. And when the clients tried to take out the deposits, obviously the banks didn't have all the cash available, and then they went through bankruptcy proceedings. But this is not what's happening here. The staking is not similar to deposits. Let me explain to you why. So when you have actually decided to stake your cryptos and now you want to unstake them, you want to take them back, the only thing that's relevant for you is how long is this unstaking period lasting. Now for many blockchains, proof of stake blockchains specifically, this unstaking period happens extremely fast. For instance, for Tezos, which is a proof of stake blockchain, the unstaking is pretty much immediate. There is no latency, no time delay between the moment you unstake your cryptos and you actually get them back. Even for Ethereum, the unstaking period takes 256 epochs, which is still very fast. But the most important thing you need to understand here is that the unstaking, even if it takes a little bit of time to complete, is not delayed because of liquidity transformations. There is no liquidity transformation happening when you stake your cryptos. They're just sitting there in the validation process. The moment you decide to take them out, you're taking them out. There is no actually entity or protocol or smart contract in the back purchasing less liquid assets. And that's what the Swiss regulator got wrong. There is no liquidity transformations happening here. It's just staking and unstaking your cryptos and how long from the settlement perspective it takes for you to unstake your cryptos. When everybody asks you what's happening in Switzerland and what is the Swiss regulator getting it wrong, tell them Swiss regulator is trying to kill staking, but they are thinking or assuming or interpreting that there is liquidity transformations happening when you stake your cryptos and you want to unstake them, but that's not the case. It's just the latency of the settlement on proof of stake blockchains. That's for all of it for today. See you soon, and I hope you enjoyed this video.